Are signs of a housing market crash finally starting to appear? Or is the housing market actually starting to bounce back? Well, stay tuned in today's video because I'm going to share with you the latest market data on what the numbers are telling us, and also let you know what experts are revising their forecasts for 2023. Are they revising them up or down? Let's find out right now. Hi, this is Andrew with the Andrew Smith team here in Frisco, Texas. And talk of a housing market crash has been around for quite a long time. It's really no surprise. It's been around since right as the pandemic started, this big bubble. What goes up must come down. It's going to come crashing down. It's going to be worse than 2008. We've heard this many, many times, but is in fact it true? It hasn't happened as of yet, but it's obvious that a lot of people still think it's going to happen. As a matter of fact, a recent survey by NerdWallet showed that 67% of Americans think a housing market crash is imminent or will happen sometime in the next 3 years. Now, with that in mind, it's important to point out that in order for there to be a true crash, true pricing depreciation, you need two things to happen. You need supply to go way up, and you need demand to go down. You've got to get a big imbalance between the two. I've got a link above to last week's video where I talked all about supply and what we're seeing right now. But the supply that was expected to increase rapidly, especially as mortgage rates shot up, didn't actually happen. It hasn't happened as of yet. As a matter of fact, supply continues to fall. And demand, while demand did also fall rapidly after mortgage rates went up, mortgage rates have been coming down since September, hovering just slightly above 6% right now. Well, Mortgage News Daily did a survey recently, or did an analysis, I should say, that showed the impact mortgage rates have on buyer demand. Here's a look at that. So as you can see here, that weak buyer demand exists when rates get over 7, and we start to see strong buyer demand when rates are below 6. Now, currently, and for the past few months, we've been sitting right in that 6 to 6.5% range, showing good buyer demand. And that's exactly what we've been seeing. Buyer demand in the marketplace right now is actually fairly strong. Surprising, not necessarily what you would expect based on the news that you're probably reading and seeing. And again, rates are expected to continue to fall, which means right in time for our traditionally busiest time of the year, the busy spring market, we could be back in strong buyer demand mode. So with that in mind, Mike Simonson, he's the CEO of Altos Research, and Altos powers the weekly market reports that I put out each and every week. Here's what Mike recently had to say. He said, I'm looking at the latest housing data, and I see surprising demand indicators, including home price resiliency and supply staying restricted. Who would have guessed that? And I think that's been the sentiment that a lot of people have had. Who would have guessed it? Because this isn't exactly what we thought was going to happen, or what was forecast to happen just a few months ago. So with that in mind, let me show you the latest Frisco market report and point out just a couple of things. This one just came out this morning. All right, so here's my latest weekly market report for Frisco. And I just want to point out a couple of things quickly for you here. Right here at the top of the report, the Market Action Index. This acts like a speedometer on what's going on here in our local market. The farther to the right the speedometer goes, the faster or hotter the market is running. As you can see here, the needle's sitting right now at 48. Last month, it was 41. So that actually shows that the market is heating up. It's becoming more active than what we have seen. Now, just to put some perspective to this, last spring, or this time last year, we were pegged right at 100. Market couldn't be any hotter, as I'm sure many of you know. But a couple of things to point out here. The median list price here for Frisco, what you can see is that prices have actually been fairly stable. Yes, we saw a peak and then we started to come down a little bit, but for the past couple of months, prices aren't really moving at all. As a matter of fact, the latest data is showing us that homes are selling for approximately 94 to 96% of list price in the Frisco and Prosper area. So you're not really seeing massive price reductions anymore. And prices, as Mike just said, are actually fairly resilient. They're showing a lot of stickiness, so to speak. And if, what we've got a situation where for many sellers, if their home isn't selling, they're simply taking it off the market. They're not trading in that ultra low mortgage rate, at a discounted price on what their home may sell for. Now, the one other thing I wanted to show you on here is inventory. And as you can see, right as I mentioned at the beginning, in order for prices to decline rapidly, what you're going to need to see is a big increase in supply with falling demand. Now, this shows here, this right here is the 90-day average, and here's the 7-day average. Either way, you can see that our inventory here in Frisco continues to fall each and every week. So inventory continues to go down. And as I mentioned, our buyer activity is remaining fairly strong. Now, at the top of this report, please feel free to put in any city or zip code that's most of interest to you. You can get this exact same report delivered right to your email each and every week. So please feel free to sign up for that. So with that in mind, it should be no surprise that the banks are starting to revise some of their forecasts. As a matter of fact, here's Goldman Sachs. This was amazing to me when I saw this, because you can see here back on January 10th, 2023, they were forecasting nationally that home prices would decline an average of 6.1%. 2 weeks later, on January 24th, they're already revising that to say, we now only think that we'll see national price declines of about 2.6%. That's a big change in just a couple of weeks. And again, these are national numbers. Here in Frisco and Prosper, I don't expect that we're going to see that. As a matter of fact, right now, I firmly believe that we're going to see pricing hold fairly steady and actually tick up a little bit in the months ahead. I don't think we're going to see runaway appreciation, but for anyone out there that thinks locally here, we're going to see 10, 15% price drops coming up in the coming months, there is nothing in the data anywhere to indicate that that is going to happen right now. And if anything does pop up that indicates there's trouble up ahead, I'll definitely let you know. So stay tuned here. And again, the other big question is a recession, but economy is remaining fairly strong. We saw the jobs report that came out just recently that showed over 500,000 jobs were added in the month of January. That was not expected at all. So there's a lot of resiliency in the economy right now. And overall, it's active out there. It's definitely active. So again, each and every week, I hope you find this information useful. Please feel free to subscribe to this channel if you want to be up to date every time I put new information out. Hit that thumbs up icon to be notified. That would help me out greatly, and I would appreciate it. And as always, if you have additional questions or a situation you'd like to discuss in more detail, please don't hesitate to reach out. You can send me an email at andrew@theandrewsmithteam.com, or feel free to give me a call at 469-296-5230.